Hello and welcome to the trade. Well, before we get into the charts, let's take a look at what traders are watching out there. Core inflation in Japan's capital accelerated for a third straight month in July, data showed, keeping alive market expectations of a near-term interest rate hike by the central bank. Core consumer prices in Tokyo rising 2.2% in July from a year earlier. Problems in the highly competitive US car market, including weak prices, high inventories and difficult logistics, dented profits and hit shares of the car makers, including Ford, Stellantis and Nissan, as they scramble to find a fix. Global car makers are facing a weakening outlook for sales across markets, in particular the US, while also juggling expensive transition to EVs and growing competition from cheaper Chinese rivals. Singapore's central bank has kept its monetary policy settings unchanged as expected. Of the 10 analysts polled by Reuters, 9 had expected the Monetary Authority of Singapore to hold policy settings steady for a fifth successive review. And oil prices have settled higher after strong US economic data stoked expectations of higher crude demand, but the gains were limited by concerns about lower demand out of China. And 12 companies, including global miner Rio and Chinese EV maker BYD, have submitted proposals to extract lithium in Chile's Alatandias salt flats. The state mining company Anami said the salt flats in the northern region of the Atacama are one of the areas where the Chilean government is aiming to boost lithium production in partnership with the state by kicking off new projects. Well, let's get across now the charts that matter, particularly with a focus on currencies. Nick Twidale joining us from ATFX Global. Nick, welcome.
Thanks very much for having me.
So I guess the immediate focus now for markets, particularly as we see this reflected on currencies, will be that PCE tonight out of the US. What are the expectations and what are we seeing with the US dollar at the moment?
Well, strangely enough, you sort of come in the morning and the dollar's relatively flat, but when you look at the charts, there's been a hell of a lot of movement, especially in the yen. So yen's been the main mover, but I think we're going to start to see the dollar come back into focus today, in particular because of this PCE data. We know it's the Fed's favoured inflation metric, and we know it's probably going to move those expectations for that rate cut that should be coming in September. So we've seen some massive moves in currencies, and as I said, this week it's not really been the dollars. The dollar's moved against the yen and it's moved against the currencies, but really the yen's been the dominant factor that's been moving markets, and it's been a real risk off move. So like here you can see this is dollar yen, and it's been a massive move down for those highs, obviously helped by the BOJ and expectations of that rate hike coming next week, actually.
Well, in fact, I was just mentioning too that Tokyo inflation rate. So what do you make of that?
I think that's helped the argument that we may get a move from the BOJ next week. So it's certainly what they've been focusing on a lot over there. We may see an easy on the bond buying as well, which I think now, to justify these moves we've seen in dollar yen, I think we do need to see central bank movement. It's been a hell of a capitulation from both the dollar yen and on the crosses. So Aussie yen, Euro yen, you're seeing nearly 10% decreases from them literally over the last week or so.
So is it a buy the rumour, sell the fact?
I think it could be. I think there's a little bit, until the underlying fundamentals change, and we know there were massive carry trades on as well. So there's a bit of that flow coming through that's hit the market. But to really justify those moves that we've seen, I think we do need to see like one or both of those central banks that are key to, say, the dollar yen move. So the Fed would need to cut rates in September, and I know we're factoring that in, but also a move from the BOJ. If not, we could see a sharp correction of some of the moves we've seen, because that carry trade is really still quite attractive when you look at the points involved.
And what are you seeing with the Aussie? Yeah.
So the Aussie, I had to throw this in because that's been a massive move down, and like the Aussie, I was doing a piece this morning, the Aussie's been in free fall as well, but no one's really been talking about the Aussie because yen's been hit so hard. But Aussie yen down pretty much from just shy of 110 to sub 100. There's some big option interest around 100, and I think that's helped stimmy the move. Also, last night's US data helped a bit and added a little bit more sort of risk appreciation into the market, and that came back with you can't see the bounce too well on that daily chart, but there was a little bit of a bounce there. So it's going to be interesting to see where we go, and I think markets are probably going to have a little bit of a breather for the next couple of sessions until we see the PCE numbers.
Well, Let's specifically talk about the Aussie then, and what we're likely to see with, I mean, those forecasts of where it was likely to go at the end of the year, are they perhaps a little off track now? Well, when we take a look at that hourly chart.
It's been a big move, hasn't it? I mean, a move down from sort of like just shy of 68, which is close to the year's high, to back under, down to 65 overnight, has been a massive move. And as you can see from that chart, there's really been no respite. Like any rally's just been hit fairly hard, and even the local corporates that you normally see picking up on these dips have not made much of a dent.
But so what's the real trigger been for that?
It's been commodities getting hit.
Yep.
So I didn't put a gold chart in, but gold's been hit considerably.
Yes.
Copper's in pain. And I think just a re-evaluation of that risk trade. So the global story, we're looking at China as well. China's not looking fantastic.
Well, but also China having cut those loan prime rates. Is that sort of the market recognising, hang on, they recognise there's a problem there, they're doing this, and therefore you're seeing that?
That actually was one of the first moves that kicked this off from sort of those mid-67s where that 200-day moving average is coming in. The first move that came off, none of the other majors really moved, but Kiwi and Aussie got hit because they've got such a close correlation with China. So when those rates got cut, that did take us down 30 points on the day. And to be honest, if I think back to that, it's a very good point, because that was one of the catalysts that started that move in the Aussie.
Elsewhere, what are you seeing with the euro at the moment, Nick?
It's been relatively flat to the rest of the currencies, and I think really the move down, I only throw the daily chart here, the move down's come really from euro-yen flow. We're sitting in the middle of the range. So tonight I think that PCE data could be key to see whether we get a move outside of this range. So I think 0.2 is expected as an increase for the month on month. Anywhere higher than that, then I think you could see euro like drifting all the way back down to that support level, a lower print, and then we're going to really knock in these rate cuts that the market's kind of demanding, and you could see a break of those recent highs and us back up to sort of the 110 levels.
And finally, take a look at the pound with, is the BOE going to cut?
I'm not entirely sure they are, to be honest with you, and there's been talk, and it's nicely priced in. That's also been figured into this move, along with the dollar strength and along with sterling yen selling this week. I think there's room for a bit of a rally. If they don't cut, then I think there's a substantial rally. We'll get back up to that 130.50 level. If they do, and I think that's where we're favouring at the moment, it's 127.50 fairly sharply. But I'm not entirely sure they're going to go this time.
Have we seen much movement in the wake of the change of government?
No, and that's. I think we mentioned it a couple of weeks ago. Last time I was on. Normally, the market will give it a bit of a tap the cable when a Labour government gets in, but it's been largely supported by financial markets. So I think that's going to be key for cable and for sterling on the crosses as we move into the second half of the year, to see what the new government does and any changes they make. Normally, you start seeing sort of more left-moving policies coming from a Labour government, and that will generally lead to sort of left-hand side, so sterling selling.
Nick,
but we'll wait to see if it happens.
We will indeed. Thanks for joining us on ATFX.
Thanks, Andrew.